You know, the fun thing about getting older is you can start seeing patterns and you begin to see same phenomenons playing out again and again and again. And the more attention you pay to what's going on out there, whether it be in the world or in the stock market, the more you get to see the games that are played in these patterns that kind of reoccur again and again and again. And so here today in this video, I thought this would just be a straight gem dropper here today. They're playing games, okay? They're absolutely playing huge games. And I want to show you and expose exactly what's going on here. I want to explain to you the game they're playing because I think very few people understand this game that's being played right now. And then you have a choice to either play this game or, you know, let's just call it not play this game, as with all games in life, okay? So this is just a gem dropper video here today. It's one of those rare ones. I appreciate y'all joining me. All I ask in return is that you smash that thumbs up here today. Make sure you subscribe to the channel. I appreciate you taking the time to watch this video here today. I think this is one you're going to get a lot of value out of, and you're really going to enjoy this one. Let me know in the comment section if you do. Also, if you're in my Patreon or my private stock group, I know a lot of you guys have been hitting new record highs in your portfolios, reaching new milestones. Make sure you fill out your forms so you can get your awards and get entered into the Hall of Fame as well. So in the private group, that's in the Discord chat, and in the Patreon, that's in the Discord chat for the 5-figure, and then obviously the 6-figure, 7-figure is in the private group. And we will be updating photos pretty soon here. We got a lot of new people on the Hall of Fame, and these photos are kind of outdated at this point in time. So we got a bunch of new people we'll be adding there, okay? Alrighty, so this is a 1-week chart of NVIDIA stock. It's really, really fascinating. So going into this week, and remember, Monday the market was closed, so it was a 4-day trading week, okay? So the expected move for NVIDIA this week was over 11%. So that was what was expected, like either 11% plus up or down in either direction, right? That was kind of what was expected. But prior to earnings, something happened that really screwed up a lot of things, okay? And NVIDIA stock kind of just tanked before earnings for honestly no reason. There was no news, there was nothing, but the stock just tanked and tanked and tanked as you went into those earnings. And then after the earnings, there was this obviously epic, massive move up. Right at the open here today, right at the open, another epic move up straight to a crash in the stock. I mean, it went from like 820 plus to 770 range. Quick. Any news break in that amount of time? No, nothing like that, right? Now, let me explain what happens here and how everybody ends up getting screwed except the people that didn't want to play the game, okay? So, on the bearish side, right, if you were negative on NVIDIA stock, you thought they were going to miss their earnings, this was it for them, they were going to crash, all these sorts of things, which a lot of people were convinced this was going to be the one that, it took down NVIDIA bad, right? So you would have been buying, keep in mind the stock going into that, basically the back half of last week was kind of in the 730 to 740 range, somewhere in there roughly. Like, or we could even say 720 to 740, right? Last week when a lot of people were loading up, getting ready for this week, right? So if you were kind of thinking bearish, you would have been buying like 660 puts, 650 puts, 640 puts, something around there, because that actually would give you something that you could make some decent money in if NVIDIA stock tanked in any substantial way, which if you're bearish on NVIDIA, that's what you were planning on. You were planning on NVIDIA going back down to 600, maybe back to the 500s, where it wasn't even in the 500s that's long ago. So if you're bearish and you're of that thought process, you're thinking, NVIDIA was in the 500s not that long ago. Like, who's to say it can't go back there after these earnings, after they miss or don't have a good guidance or something like that, right? Now, obviously the stock tanked in the first couple trading days of this week, right? And so if you're bearish, you're thinking, somebody knows something. Look at how weak the stock is going into earnings. Like, somebody's got the numbers. Like, somebody knows something. So you're kind of getting this confirmation bias of like, okay, we're gonna print some big money here, baby. This baby's gonna tank big, right? We're already looking good here. Now, that was actually your chance as a bear to take your profits and run out of it and say, screw even trying to play for earnings. I'm not going to do that, right? But would you have done that? No. Of course you wouldn't have, because you got to ask yourself, why'd you get in it in the first place? You got in it in the first place because you figured NVIDIA was going to report disappointing numbers, stock was going to tank, back down to $600 or maybe back to the 500s. That's why you got in this put position, right? So when you even got gifted that opportunity to get out and actually make some profits likely, or break even and just run, you wouldn't have taken it. Because it's not why you got in the stock in the first place, right? You're holding this through earnings because they're going to tank. They're not going to report their good numbers, right? So bearish side, all got absolutely wrecked, as we know, right? Stock flew after earnings, and so all those puts, all those people buying those put options, they all expired worthless. Everything under 780 ended up expiring completely worthless, right? Now, let's say on the bullish side, you might think, the bullish side, they made out like bandits this week, right? Wrong. They got screwed as well. So if you were bullish on NVIDIA going into this week, what type of strike prices would you have been looking at? Well, you would be looking at 800s, you'd be looking at 810s, 820s, probably even 830s and 840s, because you got to keep in mind, like a 10% move on a $735 stock, right, is $73 or so. So you need to be buying out of the money calls at 800 plus, pretty much, right? 800 plus is where you need to be. So the bulls are going to be loading up on things that are above $800 essentially, right? Well, you already got screwed. You already got set up for failure. Because of what happened in that right before earnings, the stock tanking there, you already got screwed. They already ruined you. Because even if the massive pop happens, which it did happen, you were so far behind at that point that you could never play catch up. You needed the stock to be flat or going up into earnings, so then when it has a blast higher, then you're looking good. But they screwed you right off the bat, right? So that's just, you were set up for failure. Now, you might have had a chance at the very open if you were like so strategic and you get out the millisecond that stock opened this morning in terms of those calls. If you get out right there, you might have been able to get out. With some of those strikes, you might have been able to get out break even, down a little bit, maybe even a slight profit. But you would have had to do it literally within the first 5 minutes of the market being open today. And if you didn't get out right then and there, you were finished, right? And keep in mind, a lot of people wouldn't have gotten out in that first few minutes of market trading today, right? Because they're going to be thinking, dude, this baby's flying. We're already up to 820. The market just opened. We're going 830, 840, 850. Then I'll go ahead and cash, right? And you never had that opportunity to cash because literally within the first few minutes of the market being open, the stock just tanked. And then it never came back over 800 in any sustainable way again. It was kind of flirting right there. So all these people got absolutely wrecked. They lost everything in those, right? And then, it's fascinating because all these expired worthless, right? Basically everything 790 and above, they all expired worthless. And it's crazy because look at the volumes on these guys. The volumes were epic. People were playing these thinking, it's going to pop huge. And I mean, my gosh, they got absolutely wrecked. Every single one of these ended up expiring worthless in the end. So there's massive amounts of those contracts were being held today, right? Somebody was holding all those massive amounts of contracts, and it's a lot of people, and every single one of them ended up expiring worthless. And it just kept going on and on and on. There was 920s, 930s. Look at the volume on some of these. The 920s, the 930s, the 950s, 990s, the thousands, the 1010s, the 1020s, 1050s, 1080s, 1100s, 1150s. The volumes were not small, right? And so people have been playing these all week. Buying, selling, heavy. And they all ended up expiring worthless at the end of the day. So somebody was the real bag holder at the end of the show, right? And what do they have to show for it? Zeros in their portfolio. Zeros in these options. I mean, absolutely zero. Robert De Niro. Now, a covered call involves a seller offering buyers a call option at a set price and expiration of the security that the seller owns. And so a covered call, the bad thing with selling a covered call, in my opinion, or writing a contract for a covered call, is if the stock goes up to some extreme level, you don't really get that upside. So let's say you were, writing some calls that at a $900 strike price, right? And let's say NVIDIA went to $1,000 at the end of this week for whatever reason, right? Well, you didn't get that other upside there. The person that obviously bought those got that insane upside. So that kind of sucks for you as somebody that would be writing a covered call. But overall, the covered call writer, the contract writer, that's the house. They're the house at the end of the day. If this was a casino, they would be the house, and the buyer of that is the player, right? So somebody wrote a contract at $850 strikes. They're basically the casino. They're the house. They're saying, hey, you want to come play? And then the buyer is like, yeah, I'll pay $1 for those. And the house is like, sweet. Awesome, man. And obviously they expired worthless. And so all that premium got collected there. So to give you a better example, right, imagine I have a roulette wheel here at my house, and I say, come on over, let's play some roulette, baby. I'll be the house and you be the player, right? Well, what gives me the advantage in this situation? Everybody that has ever played roulette, I hope you know the advantage here. Like when you look at that wheel, what's my advantage? I'll tell you what my advantage is. It's those green things right there, right? Those green things are my advantage because now you're going to be betting either red, black, 19 through 36 or 1 through 18, or you're going to be betting odds or evens. But because of these two green things right here, they screw up everything for you. And so over time, I'll always win over the long term. Short term, anything can happen, but over the long term, I'll always win. But the thing with the market is you can create this roulette wheel to have a lot more greens in your favor if you want, right? And I mean, imagine you sell $1,000, you're writing a contract for $1,000 strike price, that was expiring this week. There's somebody who was out there buying those $1,000 strikes, right? And it's like, they had such a slim chance of hitting there. It'd be like, you got these two numbers here. You need the 9 or the 28 or you're screwed. Everything else is all in favor of them, right? So the covered call writers, anything 900 plus, this is what their roulette wheel looked like this week, right? And the other ones, it was the long shot. They were trying to hit the lottery ticket, right? Now, a lot of people get caught up into this, and they waste so much of their capital on doing these sorts of things and trying to, be the player at the casino and those sorts of things. You can choose not to play. I live in Vegas. Every night of the week, if I want, I go down the strip and gamble. I choose not to play. And sometimes when you're there, you got to say, you know what? I'm not going to choose to play this. It's not for me. I don't even want to mentally go there. I don't want to treat the stock market like it's a big casino, because you can easily make it in the casino. Wall Street, this can be the Las Vegas Strip. It can be the Las Vegas Strip if you want to take it there. It can also be a place where you make investments in strong companies, build a great portfolio. It's up to you what you want to do. If you want to turn it into the strip, then you turn it in the strip. If you want to turn it into a place where you make great investments in strong companies, you can, right? And you look at that trading floor right there. I mean, talk about dopamine overdrive. I mean, look at this thing, man. I mean, it's just the dopamine's hitting just looking at this, and all these screens and all these tickers and these numbers going up and down, and all the money being made and lost, and there's CNBC right there. Oh my gosh, it's just incredible, right? But in reality, you look at a guy like Buffett, right? Look at that guy's office. He's done many of his office tours before where he goes to work every day, and it's just like, this place looks like the opposite of a dopamine overdrive, right? Looks like where you would go for like a dopamine detox, does it not? Like literally, this place looks like where you would go for like a dopamine detox. Right here, man. The most exciting thing with his office is this box of tissues back here, I think, okay? That's about it. But that's investing. That's treating this thing, right, like an investment purpose and an investment vehicle rather than like a dopamine overdrive of like trying to hit and miss and things like that, right? And you look at myself. You could look at me and be, Jeremy, his life is so exciting, man. So much dopamine. So like crazy. Every day, tens of thousands of dollars up or down. Wow. The variance is big, right? Some days 6 figures plus up or down. But the reality is this is what I do most of the day. I sit around, lay around on my iPad, on my phone, listen to conference calls, reading 10Ks, running numbers and projections on companies. That's what I do most of the day, every single day. The numbers are just whatever the numbers are. It's kind of irrelevant at the end of the day. For me, it's just up and down and up and down. Oh, wow, I made $40,000 today. Oh my gosh, I lost $30,000 today. Oh my gosh, I made $100,000. Oh my gosh, I lost $200,000 today. It is numbers, right? Every night, I work on my bed a lot too. I'll just lay on my bed, right? And it's a nice bed. It's from RH. It's pretty expensive. But does it feel any different than 10 years ago when I was laying on an IKEA bed? It doesn't. It doesn't. The cars in my garage are cool. That Plaid, I probably drive that. Most days I don't even leave the house. I don't even leave the house most days. I mean, and that car right there, I might drive that every week or two. The most exciting thing for me is probably my kids, honestly, at the end of the day, right? And so you got to understand this whole game of the big money and, getting and building your portfolios bigger and bigger, trust me, as the numbers get bigger and bigger, the dopamine's not there. It's just like, and if you want to continue to do well, you have to try to let's just call it, avoid this crap as much as possible and try to go toward this as much as possible. That way, these numbers just keep getting bigger and bigger over time. The more you care about this action and less about this action, the more those numbers aren't going to say as big of a number, okay? Like the public account there. That's a way I'll put that. Stoicism. I think there's a lot of people that think being a Stoic means you're very, very serious all the time. You never laugh. You could never joke or anything like that. And I just don't view it that way at all. When I think about the great Stoics of our time, these people can laugh. They can smile. They don't have to walk around serious all the time, like they're miserable or something like that. But when they go to make decisions in their life or in their investments or their businesses, they approach it with the level of stoicism, and they approach it, which is practicality, without emotion, right? If I think about Jeff Bezos, I mean, there's tons of videos out there of Jeff Bezos laughing and cracking up. I think he's one of the great Stoics of our time. That man, every single time you've ever heard him speak about business or what he's up to with Amazon, I mean, the man's just as stoic as it can get. It's just practicality. Here's how we can do it. Here's why we're going to do it. When you listen to Buffett loves to smile and all these sorts of things. That dude's the most stoic of stoics out there. I mean, when he goes to making a decision, it is thought through 1,000 times, is the most practical decision, and he just, goes out there and executes, right? Zuckerberg, I mean, holy smokes, you want to talk about a stoic? Holy cow. Is that man a stoic? I mean, people don't even think he's a human. I mean, that's the ultimate compliment to a stoic, right? I mean, they don't even think you're human. That's how much just how he thinks about that, right? So when you think about your investment portfolio, are you making decisions on like a stoic decision, or is this more of an emotional decision based upon dopamine and trying to get a fix and I'm going to make a bunch of money today and things like that, right? Another way I'll put it is, if you had to ask one of these two people to manage your stock portfolio, who would you do? Kanye West? Would you have Kanye run your portfolio? Heck no. You'd be the biggest Kanye fan in the world. You'd say, dude, I do not want him managing my portfolio. That man's up and down and all around. And one minute he'd be selling all the stocks because he's mad at somebody. And next minute he'd be all in. And it was just, no. Okay. A Jay-Z, would you want him run your portfolio? Yeah, I'd like a Jay-Z. Jay-Z, I could tell you, much more of a stoic. Everything's thought through with that guy. Everything's planned out. You don't get Beyonce to be your wife without being a little bit of stoic. That's all I'm going to say about that. Okay. Don't treat the market like it's Las Vegas. Don't make decisions based on emotion, and know what you're doing in the market. Don't just gamble your money around, okay? If you do not know these things in front of your face right now, you got a lot of work to do, okay? These are very base level things. Forward P, PS ratio. If you don't know how to read an income statement, a balance sheet, if you don't know how to tell a moat on a company, portfolio construction, cornerstone stocks, you're in trouble. You got to know those sorts of things. I did a whole video today inside the private group about cornerstone stocks and how important those are in a portfolio. And you do not have a real portfolio until you have cornerstone stocks in it. And a lot of people don't even know what the heck a cornerstone stock is. Like, what is that? What it constitutes that? You don't even have a real portfolio if you do not have those. I can promise you that, okay? Now, if we were to talk about the range of where investors are, right? You have certain people that are always ultra bearish, just very, very negative. It's always the crash, the biggest crash ever is going to come, and Great Depression, all these sorts of things, right? On one side, you got the ultra bullish. It just seems like they're always positive. They always have good things to say about the market. It's always like, everything's to the moon, right? Then you have your midpoint. Where you need to be is a little bit more over here. You need to be on the bullish side, because it pays way better to be on the bullish side. Okay, there's a reason the short sellers aren't on the billionaire list, and there's a reason the optimists are on the billionaire list. Okay, this is where you need to be. You cannot be all the way over here, or you're going to be in euphoria. You're going to take way too much risk in the market. And you also never want to lean on the bear side, because it doesn't pay very well on the bear side. Actually, it doesn't pay hardly at all on the bear side, right? Now, what gets attention? You got to ask yourself that, right? Is it over here? Is it the midpoint guy that's kind of in the middle of the stoic? No. It's the people that are ultra bearish and the people that are ultra bullish are what actually gets attention. Okay? When I say gets attention, that means takes your attention and diverts it toward these sorts of thought process, right? Of either it's the end of the world, ultra bearish, or it's the best thing ever, ultra bullish. This is what takes your attention away, right? And to give you real life examples of this, right, and how you need to avoid this, I looked at like some of the CNBC's most viewed videos the last couple of days. Guess what they are? They're Tom Lee videos. Tom Lee, 2 days ago, 114,000 views. That's a lot of views for CNBC, I can tell you that. Their channel, most of those videos they put out on their channel gets like 1,000 or a few thousand views. Look at the channel. You'll see 1,000, a few 1,000 views. And there you have Tom Lee, 114,000 views. And then this one, 2 days ago, 130,000 views. Why does he get that? Because Tom Lee has, he makes big statements. He definitely is more on this side, right? This is what gets attention. Tom Lee is one out there at the beginning of the year saying, Russell stocks could be up 50 to 60% this year. Small cap stocks, 50 to 60%? Small cap stocks? That's an attention-grabbing thing, right? That's going to grab your attention. What? He said, what? Small cap stocks could be up 50 to 60% this year? Oh my gosh. And so people tune in. It gets a lot of attention, right? If I think on the bearish side, there's this guy, Harry Dent. It's always the end with him. It's always the biggest crash ever, right? Look at this. 3 years ago, Harry Dent stock market, this is over 3 years ago, stock market 40% crash in April. Nothing can save you. Bitcoin is zero. This is over 5 years ago. Biggest market crash of our lifetime is coming, says Harry Dent. This is over 5 years ago. We're still waiting, Harry, okay? This is over a year ago. Greatest crash ever. Void equities in housing until 2024. What's funny about that is now we're in 2024, and I saw he went on Kevin's channel recently, and guess what he was saying? Biggest crash ever, and talking about 90% crash, blah, blah, blah. And here we are in 2024. So he was supposedly saying, avoid things until 2024. Now we're in 2024, and he's saying, no, it's the biggest crash ever, right? Because that's what's getting attention. He can't get attention unless it's always the greatest, biggest crash ever, right? Look at this, 10 months ago. Your wealth will disappear by June as final crash wipes out stocks. The market will collapse. This is over 2 years ago. The market will collapse. If I'm wrong, I'll quit my job. I don't think he ever quit his job, by the way. But the market never did collapse, by the way. Harry Dent, this is over 2 years ago. Greatest stock market crash of our lifetime is coming. First plummet in Q1. Greatest crash of our lifetime. It never came. It never came. We never had the greatest crash of our lifetime. Harry Dent unless your lifetime is like, I don't know, last few years maybe. But if your lifetime's 30, 40 years, you haven't seen the greatest crash of your lifetime. I can tell you that because there was the tech bubble. There was a great financial crisis. There was the Rona crash. Harry Dent on real estate bubble. This is over 5 years ago. Whoa, what would you think now? I mean, real estate, if we go back 5, 6 years ago, real estate was cheap compared to what it is now. Harry Dent, 87%, this is over 2 years ago, 87% stock market crash by March, and it won't recover for decades. Dent's final warning, oh my gosh. Oh my gosh. Oh my gosh, right? This is why I love having my reaction channel. Because I can watch these videos, I can react to them, I can call BS on a daily basis, or if it's reality. But I know these things get a lot of attention, right? They're grabbing your attention. Remember this. These ultra bearish cases, everything 90% crash, ultra bullish cases, everything to the moon. That's what grabs attention. Being practical in the stock market doesn't get views, doesn't get attention. Not the sort of attention that you get over here, right? Look at those Harry Dent videos. I mean, we're talking about 100,000 views, 400,000 views, 300,000 views, right? 700,000 views, 600. That's what gets attention. You got to understand that, right? And so for you as an investor, you just got to avoid that type of crazy crap. Unfortunately, most humans can't avoid it. They can't. They don't know how to. They just hear or see something outlandish and they're like, they gravitate toward it, right? And it makes other people gravitate toward it. Being practical or like having a normalized thought process is just not it, right? And it reminds me of sports. In sports, you ever watch ESPN or different things? What's always the things that get the most attention? It's the most extreme case of Charles Barkley, he was a better player than Michael Jordan. So it's just something ridiculous, right? They're just like, wait, what? Wait, what are they saying? That's what gets the attention, right? The most extreme view. If you turn on MSNBC, they'll have you convinced that if T-Man gets elected, we're done. We're screwed as Americans, right? If you turn on Fox News and you watch that, they're going to convince you that B-Man, if he gets reelected, America's done, right? that's the thought process. You might think that's true, and that's respect. Like, whatever way you want to think is whatever way you want to think. I'm not here to change your opinion on whatever way you want to think. What I am here to tell you is what's actually going on in reality, and what they actually are trying to get you to do, and feel emotional about these things. So you think, this way and that way, and whatever grabs attention. If you're more of a middle point, you're not going to get views. If you're more like grounded in the middle, you're not going to get views. You got to be more on the extremist side of over here. This is the end for us. This is the end if this person's in office, and this person's in office. This is the end. We're done. We're screwed. It's all over for us. That's what gets attention. If you were more in the middle and you were going through the pros and cons of like, well, here's the pros of this person. No one's watching that. No one cares about that. They want to be more entertained, right? And so if that's politics for you and you're treating it more as entertainment, or if that's sports for you, that's fine. But for investing, it's not fine. For investing, you've got to act with a level of stoicism in the market. You've got to focus on the fundamentals and not this emotional crap and the ups and downs and the predictions of it's all over for us and the predictions of we're going to the moon and all these things in between, okay? Because all that's going to do, cloud your judgment. You're going to be focused on a lot of crap you shouldn't be focused on. And then when, certain things happen, you'll blame it on, all the media, they told me that or whatever. But you got to take accountability with yourself. You can control what you tune into and what you don't tune into, right? And I just think that's, pretty valuable for everybody out there, okay? And I listen to what everybody says, and I know what's entertainment and what's not entertainment. And I listen to a bunch of different people's opinions, but at the end of the day, it doesn't change any of my investment thesis ever, okay? And that's how you got to be in the market and focus from there, okay? Much love as always. Appreciate you joining me, and have a great day.